In today's video, we are talking trading versus investing. What are the similarities? What are the differences? Which one is right for me? Which one is right for you? So hopefully you guys will enjoy the video and let's get started. All right, everybody, let's start off with my passive income stream. Let's look at the portfolio really quickly. So you can see I am at $15,602. So pretty much flat from last week. We are down 3% overall. Market gains are negative and earned dividends are positive. Obviously, they're positive. They're offsetting about half. So my total gain is 300 or negative 312.36. We can see from the week that we are down. Most of that, is coming from this past week. Markets were down overall. Let's check out my activity on dividends for the week. And see what was going on. So for dividends, I did receive, it looks like, just one dividend this week from Lockheed Martin at about $1. I did put in some buys. Let's check out what M1 bought for me. We bought some Johnson & Johnson, some AbbVie, some Philip Morris, Crown Castle. And remember, with this automatic reinvestment, it is automatically reinvesting into things that are underweight in my portfolio. So if we jump back to the portfolio overall, you can see in my two slices here, this chart basically tells you what's overweight, right? So I have too much ORI for my target, and then what's underweight. Like, let's see, we're slightly underweight on Prudential Financial. So as those stock prices fall, I might become underweight, and then the dividend reinvestment automatically will buy into those. And whenever I have buys, it will try to balance this out as best as possible. So overall, I think the weekly return was negative, but pretty close to what's going on in the stock market. Nothing significant to worry about. We'll see if things continue, right? If we have a second dip, that'll be another chance to buy a lot of stocks. So overall, I think you should check out my other video on when to buy things on sale. Remember to hit the subscribe button, tell your friends, and let's jump into the rest of the video. All right, so today's video was inspired by a tweet I saw. And so this tweet came from wealth.ng. Shout out to wealth.ng. I'll put a link to their Twitter below. But basically, I wanted to talk about investing versus trading. What's the difference? Why do people do each? And I thought this very briefly summarized a lot of the differences. But overall, I'm going to start actually with the similarities before we get into differences. So I think the most similar thing between the two is around using the stock market as a tool, right? So both strategies leverage the buying and selling of stocks in order to accumulate wealth, right? And I think stocks are a relatively fluid measure or liquid measure, I should say, of wealth, and it is a way to quickly kind of trade, right? So you're both trading, right? That's where the term comes from, and that's why people are sometimes conflate the differences between trading and investing, or don't understand the differences between trading and investing, because you are buying and selling stocks, right? That's the instrument that you use in order to make money. I think the second similarity is you want to come out with more money than what you put in. So obviously you are looking to make money. Both types of people have the same goal, right? Traders are wanting to make money, and investors are wanting to make money as well. I think the key thing is the actual differences, right? And we'll get into the differences here. So I think the obvious difference, and it's highlighted here, I'm going to cover three of these, is short-term versus long-term. So the trading investor, or the trader, I should say, has a very short-term view, right? They are looking at, how can I make money on each transaction? How can I get the most out of this particular transaction, buy super low and sell super high, right? That's the goal. And if you're even on a quicker time frame, you're not looking for super highs and super lows. You're just looking to buy something lower than and then sell it high, right? And that can be in a very short time frame, and that's typically what people refer to as day trading. So you're looking at things from a price perspective, and you are looking to get in and get out as quickly as possible. So in investing, you have a much longer term perspective, right? So you are trying to accumulate wealth over a longer period of time, and you aren't as concerned with the fluctuations in price. So if things are going up or things are going down, that is just a short period of time, and you want to make sure over the long period of time that things are generally going up. So that's why people invest in things like ETFs or the overall index funds, because over the long term, it's been proven that the stock market generally will go up. Now, to what extent each dip and fall occurs, it doesn't really matter over the long term because you are gaining wealth over the long term. So that is a key difference. Let's find an image that represents this more visually. So let's take the example of the Dow Jones Industrial Average, right? This takes the top 30 stocks by price, which is a weird measure, but that's the way it's always been done. It takes the top 30 stocks by price in the US and essentially measures their value. So you can see from a long-term perspective, right, this has gone up significantly. It's gone quite dramatically up. So if we kind of scan all the way along, it's gone up over 2,700%. That's quite the amount, right? And if you've invested way back here, you've made a lot of money here. And so I think that is the key perspective of investors. Even if you started here, let's say you started at the peak of the last big dip, which was in 2007. Let's say you started here and you held on for 13 years, you're still up 86%, right? That's a dramatic amount of increase. But now let's look at a shorter term perspective to understand what traders are looking at. So if we look at the day, you can see there are kind of valleys and peaks throughout the day. So if you're looking at a day time frame, you can understand that I might want to buy here and sell here or sell here. If I hold out a little longer, I can sell here, right? So typically you're doing this with individual stocks because you're looking at a lot of technical analysis of that actual stock when you're trading. But you can also do this with indices and those kind of measures. Again, you can look at 5 days. You can see even a bigger difference here. So like, let's say you held out for a week. Let's say a week was your time frame for trading. You don't want to start here and then sell here, right? And if you started at the beginning of the week, and you held out to the end of the week, you're kind of in a bad position. But if you started at the beginning of the week and sold the next day, you probably made out. Okay, so I think that hopefully represents and shows you the differences between investing and trading from a time frame perspective. So let's jump back to the tweet here and look at the next difference that I'm going to highlight, which is you're looking at short term, or looking at price versus growth, right? So this is profit versus growth. So I think in trading, you're looking at the price of an individual stock, and you're looking, or an index or a fund or whatever it is you're trading, and you're looking at that price and you want to say, okay, when I sell this, I need my price to be higher. Investing is more about portfolio growth, right? So I'm looking at all the assets that I manage, and hopefully over a long period of time, they will grow, right? So their price, it might be price oriented, or it might be dividend oriented, or it could be something else, right? You look at how the company is structured or how the fund is structured, and you're looking at over a long period of time, will my assets grow? So you're not as focused on the price, right? So it's similar to the short-term versus long-term perspective, but a little different. So let's take an example that people love, which is Tesla, right? So Tesla is an interesting kind of dichotomy, because people will typically invest in Tesla or trade on Tesla for different reasons. And so some people believe in Tesla, right? They believe that this form of electric vehicle is a new technology, and they are adding to the economy. They are adding to our future, adding to our technological growth as a society. And so for those folks, they tend to have a longer term view. They invested in Tesla early maybe, and they are holding on to the stock because they just believe in the company, or they believe in Elon Musk. And that's why they are a longer term, and they're not as focused on price because they're focused on the growth, right? So they don't care that there can be dips, or they're less concerned that there are dips from time to time in Tesla's share price, because overall they believe in the fundamentals of that company. Whereas traders on Tesla are often looking at price. So let's look at a 5-day here. Again, it's down like most of the market. This was this week, and you can see that they are very concerned when something goes from $1,000 down to $948, right? That's not a good look. And then it goes back up to 994. Like, you're very concerned with the ups and downs of the individual prices throughout the day. You can see it here in the 1 day, right? So you start out at 994 and oh no, we're down to 962, right? That's what you're concerned with, is the actual price when you're trading. And so people know that they can look at Tesla for trading because there will be fluctuations in a short period of time. And so if they can get in when they think something's low or before some big news gets announced, then they can turn around and sell it immediately after that news is announced if it's positive news, right? And so they're always looking to get in while something's cheap and get out while something's expensive. And so that hopefully highlights the differences between price versus growth focus. So if we jump back to this tweet again, I think the last difference that I'll highlight is technical analysis versus fundamental analysis. And so I think with trading, you have to be very interested in these like financial metrics and understanding where they're going to move or change. So whether it's kind of PE ratios, which again is actually more of a fundamental analysis, but things like their moving averages, right? So what was the moving average, 7-day moving average, the yearly moving average, whatever it is, and the momentum that the price has is what you actually care more about than anything, versus fundamental analysis, which is what I've done in some of my other videos. So I'll put a link to one of my other videos that kind of shows a more fundamental analysis of a particular stock. But I think what you're looking at there is things like dividends, or their ability to generate free cash flow, or their assets and their liabilities. So you're looking at their balance sheets, you're looking at their cash flow statements, you're really trying to figure out what's going on a fundamental basis. So hopefully that explains to you what technical versus fundamental means and the differences overall between investing and trading. I'll highlight them again. So for traders, you're looking at short term, you're looking at prices, and you're looking at technical analysis, whereas in investing, you're looking at a long-term view, a growth focus, and the fundamentals of the particular company. So let's move on to which is right for me, which type of system is the best one for me, and why I chose what I chose to do. So probably not a shocker to most of you, but I am interested in investing more than I am in trading. And that's what this channel is really about, is dividend growth investing. In particular, right, you can see what I talked about in the previous section through my chart here. So look, I'm looking at a long-term gain. I don't do a lot of selling based off of short-term activity. You can see I have kind of peaks and valleys, and I'm really focused on this trend line over time, right? And this is my overall view. It hasn't even been a year yet, but hopefully, many years to come, we'll still see this trend line going up. And I think that's really the focus of what I tend to do as an investor, is look at a long-term perspective and how can dividends enhance and grow my portfolio. So I'll give you kind of 3 quick reasons why this is the right strategy for me. And, hopefully you guys agree, but, feel free to leave a comment if you disagree, or if you are, an expert trader and you really want to highlight the pros of trading, feel free to leave a comment below. So first, I think for me, I'm not looking to get rich quickly, right? I think my strategy is more focused on where will I be when I'm ready to retire, right? And if I retire early, great. If I don't, at least I have a portfolio that will support me through the rest of my life. And so that's really my goal. Is I'm taking a long-term view here. I'm looking at where do I want to be when I'm an old man? Where do I have enough money? Do I have enough growth? Do I have enough dividends to live off of my portfolio without having to sell large chunks of it, right? So I really want to have a passive income stream, and that's what my channel is mostly about, and that's what this particular portfolio is about. Secondly, technical analysis is not really my thing, right? So I also think in order to be good at trading, you have to be really smart and invested in technical analysis, and you have to know the ins and outs. There's a steep learning curve to become very good at technical analysis and trading. And also, there's a time commitment there. You have to be ready and willing to buy and sell very quickly, right? And I think unless you're doing that full time, unless that's your full time job, I think it's very hard to trade effectively. And I'd rather invest than trade. And then thirdly, I think, I'm a person who likes to minimize risk. So I am trying to lower the amount of risk and exposure I have. So even though we all have exposure when we're looking at the stock market and using it as a vehicle for accumulating wealth, I think I'd rather minimize as much risk as I can than gamble. And so sometimes you can border on gambling when you're looking at trading. I think investors are typically, again, trying to make sure that they don't lose large sums of money. And if they're investing smartly, they should be able to get away with that. And if they have a long enough term growth view, right? If they're looking at a long enough period of time, they should be minimizing their risk. I do things like diversifying my holdings and investing in companies with their fundamentals, with strong fundamentals, and not really taking on highly leveraged companies because I am looking to minimize my risk. So hopefully, again, you guys got a lot out of this video. Some of the similarities and differences between trading versus investing, which one is right for me. Again, leave comments below on your opinions, your thoughts. I'd love to get to know them. And hopefully you guys got something out of this video. So again, hit the thumbs up. Feel free to subscribe. Hit me up on Twitter. That's Invest Stately on Twitter. Or you can always email me at statelyyinvesting@gmail.com. And I'll see you guys again next week.